The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And as we come into a gorgeous February 12th at the headquarters of Technical Trading and Investing, it's another gorgeous day down here, a little windy. Somebody with a big parade float that looked like a pirate ship decided to hit a light pole on the way over. Almost didn't make it today. I've had to pull out all the stops, but a long time ago I timed every light, so I know exactly how to hit every light down two major roads down here. I timed it all out here. I got here just a couple of minutes ago, so ready to go. Market, of course, not doing a whole lot out here. Checked just a few minutes ago, and what do we have? The market's up a couple of points, almost 4 points on the S&P cash, 2.2 billion shares, so volume continues light. But what do we have out here? Just a whole lot of nothing. And we're going to get into that in a minute. Of course, in this day, in 2008, General Motors offered buyouts to all 74,000 of its hourly employees. So just 5 years ago. Hard to think it went that quick, but five years ago offered buyouts to all those, including a $140,000 lump payment to get those off the company books. And all you had to do is work 10 years there. So not a bad deal. Everything's kind of turned around. Government Motors, of course, continues to try to sell the federal government's investment in it. Doesn't like to be under the thumb of the government, and I don't think anybody would like to. Some are confused and think that they should be, but I think they'll wake up one day. Starting to already see some of that already, especially when they see how much gets taken out of their paycheck. And now that we know a family of four, the cheapest plan for Obamacare will be $20,000 a year out of your paycheck if you do not pay for it, or your employer does not pay for it. But although I thought that was some kind of new law that actually it has to show what on your paycheck now, what it actually contributes to that. I'm not exactly sure why, but when the government does something like that, it's always a precursor to something other that's generally evil. Anyway, what's going on? The big Goldman Sachs Tech Investment Conference is going on in California today. The first person up was, of course, the CEO of Apple. And he was about 2 minutes into this and dropped the chalupa. He said, we have lots of cash and we don't have any problem with a depression mentality. We're not hoarding all this cash. There's just nothing else out there to buy or do. And we're not going to give the cash back to the people. You know, we've got $130 billion. In another year, we're going to have $150 billion. And we really don't have any plan on how we're going to spend that other than doing the things that we're doing already. If you've listened to this show or the Tech Insider Hour with Tom O'Brien, Apple's quickly becoming one of the bigger employers, and they're going to be spending a lot of that money designing their own hardware. And they've bought up a lot of older, like Motorola buildings, stuff like that. But 3,500 people in that Austin area, I think, in the last year, if not more, and going to continue building down there. Dell also continues to sell some of its locations to Apple, but Austin and Dallas is going to be a big hub for Apple for engineers. And just because a lot of the engineers no longer want to move to California with its very high taxes. And, of course, Texas, Nevada, Florida, the three states without state sales tax, and everybody kind of digs that. especially since you can buy a house in Texas for about half the price of California. Their standard of living is quite higher also. So most of the engineers pretty happy to move to Austin. And if you've ever been to Austin, you know it is one of the, probably with Nashville, the most amount of places you can go see live talent in the country. Great live music venues there. Anyway, so we had our wonderful Steve Jobs replacement, who is a CFO, and anybody that knows this show knows how much I think CFOs are poor CEOs for tech companies. Comes out there, drops the chalupa. I am looking for one thing, and that is them basically moving up their the amount of the what do you call it? The dividend at the end of the year. They're going to have an investment conference with their investors. I think it's the 28th or 5th or something like that of March. And in that, they're going to probably update it to, I would imagine, $4 or $5 per share, which is still, what, 1%? Not a huge return to the shareholders of $130 billion, soon to be $150 billion, sitting on the sides of that. And of course, he's basically saying that we just really didn't find anything worth buying. That there just isn't worth a lot out there, and probably true. But my guess is he should have been, if they hadn't been contemplating a big purchase, then they probably should have been thinking about actually returning that a lot quicker to shareholders. Of course, no one wants to repatriate any of this money. They keep it offshore, and if they bring it back, it's a 35% penalty. So $130 billion minus 35%, they'd just rather keep the money overseas and slowly return it without taking a big hit to the actual bank statements. But basically, when he opens his yap, the street pretty much does not ever like it. This is Tim Cook, who is the new CEO, a year and a half now. And, they keep floating some stuff out there. As I said yesterday, there was nothing new to this wristwatch rumor. It had been floating around for at least 2 months. I think I reported it long before Christmas. But if you look in and on Tiger TV right now, you'll see this is pretty much the same kind of setup that we see in this market a whole lot, and that is we had huge slams down on high volume, and we get back into those gaps with lighter volume. Some actually break up and out a little higher, but most of them have been false breakouts for a few days and pull back into the trading range for the most part. When we look at other tech companies that did have good earnings, or at least responded well to earnings, IBM was another one of these. We talked about this one when it came out on the Tech Insider Hour, and my impression of this was not a whole lot. Did the numbers come in better? Yes. Is it sustainable? No. They did this by firing a lot of U.S. workers and hiring Indian workers that work for an average of $17,500 compared to $110 in the United States, and that pretty much gave the answer for all their profits out there. For the last couple of years, it's been the devaluation of the dollar. Now it is the devaluation of U.S. employees, and pretty soon that's going to be over. At one point, you have to get to actually selling more product, and why software sales were good, there just wasn't a lot out there. But if you were looking for a pattern that would actually say buy, this is not a bad-looking pattern out in this marketplace, and that is the light reversal back down into the gap. And if you were a fan thinking this market was going higher, this would probably be pretty much where you're looking. I would actually have to see some kind of sign of strength in IBM to get real wrapped up in here, but if we did see a breakout, I would imagine this would be one of the first stocks that actually started to get moving. What else do we have going on in play out here? We've got Akamai, AKAM. and some discussions out there. Another one of these that got blown apart. It's at least getting back into multiple gaps. This thing actually hopped across multiple chains. Not a lot of volume again today. This one has a high volume low. This thing's going to get tested out here at $33.55. That's a February 7th low, and you want to be keeping an eye on that one. Can this thing get back up 38, 39 bucks maybe? I think maybe in a perfect world it could, but I'm thinking more like 38 bucks. It's going to probably find a wall of people wanting to sell, and probably not a bad trade back from 38 and change back to 33.55, which is that February 7th low. But keep an eye on that. A lot of these stocks, even, there is still high short interest in a lot of them, and you don't have to do well to have these things pop and then pull back pretty much to a lot of times their breakout levels. When we look at gold, April gold rose 70 cents to $16.49.60 an ounce today. What else do we have? Silver rose 10 cents to $31.02. March copper rose 2 cents, $3.74 a pound. Other than that, a very quiet day. Probably going to see some more stocks moving in response to let me get the Tech Investors Conference. At least you would think. Normally they don't have these conferences without anything going on, but we continue to see a lot of these stocks that are dead, or cat bounces. When we look at what was it, BBBY now, BBRY, excuse me, which is Research in Motion. And we look at this just in the last few days. Not a whole lot happening in the stock when we look at it. And when we talked about that even these worst companies, the ones that you know are going out of business, they can cut a lot of expenses very quickly and get stocks up for a while. But that doesn't change the long-term trajectory. I bring this up a lot of times, and that's Enron. And everybody knew it was bankrupt. Everybody knew it was going bankrupt. It was trading at 10 bucks. Next day it was at 6 bucks. Next day it was back at 10 bucks. Especially with heavily short interest. It's not uncommon to see huge moves. I would only be on one side of that move if I knew the final outcome. Trading for a bounce in a stock like that is normally a fool's errand, and you don't want to be trying to catch a falling knife. Other stocks of interest, that was off at 2.5%. Again, not a lot of huge movers out here. On the positive side, we've got Fossil up 4%, Akamai up just almost 4%, Yahoo 1.7%, Expedia up 1.4%, Siri up, Sirius Logic 1.27%. It's SiriusXM actually. So we get back, we'll talk a few more about these movers in the marketplace.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Gold Fields. For more information, just click the Gold Fields banner on the front page of TFNN.com.
As we come back again, not a lot of news moving this market over the last couple of days, but we'll take a look at some of the stocks that are at least moving. The first one is SourceFire, F-I-R-E. This one actually made a fairly decent pattern out here. One of the few stocks that actually looked like it might be buyable. It's come down to test its previous low on a third of the volume. And what we see over the long term is fairly interesting. This is the classic Wyckoff buy. I thought maybe it might pull back a little bit farther. But on February 22nd, 2012, it took off with massive volume. That is on about 5.6 million shares. It has come back and tested that gap a couple of times. The first time is October 16th or October 17th at $40.68, 3.2 million shares. Came back one more time here on lighter volume. Nice little setup. February 7th, it got into it with 2.2 million shares. We're having a nice bounce out of here today in SourceFire, and basically they do cybersecurity technologies to commercial enterprises, government agencies worldwide. Company network security products include SourceFire applications for detecting, blocking, and analyzing network traffic. But you get the break off, huge volume. You have an untested high, which is always nice out here. You get this real long consolidation pattern back into these lows, and nice little pop out here today. You may still see this thing move back to 40 on a market pullback, But if you were bullish coming in today, one of the few patterns that actually looked very interesting. What else do we have moving on in these markets? Valspar on the downside. It is the maker of paints and other stuff like that. This is another one of these stocks that was chained to the upside in the real estate market. To see this one crack, it probably gives you a good indication that some of these add-ins like carpet companies, we talked about those yesterday, floor companies, probably seeing a little bit of weakness based on that. But this one came down. It's come down on very hard volume. It gapped the gap, which is pretty bearish out here. This thing actually popped last time with a nice gap up on the 2nd of January like most stocks did. Went up, not a whole lot of energy out here. This is the proverbial false breakout. You want to see more signs of strength, pull back normally within 5 or 7 days to the breakout area, and then maybe a continue motion on. What this one did was just go sideways for a number of days during distribution to have it fall off a cliff today, and biggest loser, 7% today. So we are seeing a lot of stocks out here. Some of these are winning, some of these are losing in this pattern. It's hard to tell exactly when these things are going to break, but fairly decent break to the downside in these markets. So we'll have to keep an eye on things like Valspar, Unilife, Crossroads, Zaza. Not a lot else out there. Zynga. We were talking about this for a while. Looks like it's finally reached its blow-off top here and is pulling back today. And that's pretty much what you're looking for. That's what you call the bearish engulfing out here. And it maybe went 1 day longer than you think, but always sell when you can, not when you have to. When we look at this, this is the definition pretty much of dark cloud cover. A huge candle on the downside engulfing the last candle on the upside. I suspect this thing's probably going to be coming around to low $3 level, and we'll see how it does on then. Maybe this is setting up for something larger. I suspect that pinning their hopes on selling into the online poker and gambling market may be a little high. I think a lot of these places that are going to own the actual permits to do online gambling may probably do a lot more in-house than Zynga thinks it does or will. But still interesting. As far as a long-term on this chart, this thing was a loser pretty much from day one, and we've seen this thing not really do anything specific. You can make a nice percentage move on it, but long-term, this is not anything that exciting out here. We had huge volume yesterday with 98 million shares. So you have made a higher high. That's probably going to get tested. So keep an eye on that. When we come back, I'm going to ask you to give me a call. 877-927-6648. 877-927-6648. Let me know what's going on. It's quiet out here. Maybe you guys could start the conversation.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we've got a caller. We go directly to Andy in Boulder. I can't even say it. Boulder, Colorado. How you doing today, Andy?
Doing great, Dave. How are you doing today?
Good. So what are we looking at here today?
Well, I wanted to talk about American Tower, AMT, and just your thoughts about infrastructure still possibly being a play, as well as maybe sector rotation back into the technology ETF like XLK, understanding that Apple is still over 15% in that.
Yeah, this I just don't see probably through the first quarter any real movement in technology stocks. I mean, we're going to get some dead cat bounces like we get in Apple right now. So I think it's going to take probably about 3 months for that to roll on through. Just don't see a lot of movement. The technology sector is the worst performing sector out of the 12 over the last 5-6 months. So while the market has kind of pulled up even some of the technology stocks for the most part, it is the weakest sector out there. When we look at American Tower Corporation, of course, they are hoping for lots of new cell towers out there to put up. Just hasn't been a lot of that lately. When you look at their chart, they broke above the $76 range, which had been resistance for several months, especially when you look back out at August 1st, October 16th and November 7th highs out here. When you started breaking through it, no real sign of strength. Even the gap days, we had about 3 million shares that day. You know, it's probably about the strongest day. You've pulled right back down to support. Are you hearing anything that I'm not hearing about a lot of people building more towers? I know that they're trying to add more subscribers, but I don't hear a lot about adding new cell towers out there.
No, not necessarily, and that was my question, though. I mean, what are your thoughts as far as the infrastructure goes and looking into the future? Are we getting to the point of not necessarily saturation, but are we having enough now? Or
I think so. I think you, as far as the towers go, what you have, and let me try to think of this the best way. What you have now is when in the old days they had a fairly set amount of users that could use one cell tower. So when as more and more people bought and used cell devices on highways and in downtown areas, they just kept adding more cell towers. As LTEs come along and some of this other, the ability to add a lot more users per actual cell tower and installation has grown. So it's not exactly the same problem that they used to have with the old GSM system and having a finite amount of users out there. They can actually pile a lot more users on one antenna than they did before. So, you know, I think the chart pretty much says it all here. I would have loved to have seen some kind of sign of strength, a huge volume day, and, you know, is this thing probably bouncing around somewhere between 75 and 79 bucks if the market goes up. If not, this thing is going to pull back down and head back to 71 bucks. I just don't see a lot here either shorting or going long. I think this thing's just kind of meandering around. They'll probably continue to put up some cell towers. Business is not going away, nor is it going to double. So one of these stocks that's probably destined to just hang out here for a while, I would think.
Okay, great. Well, thanks for the insight, Dave. Really appreciate it.
You bet. As always, you can give me a call at 877-927-6648. I want to look at a few of the Dow stocks today because we are getting some challenges to these previous highs. American Express, of course, hit with high volume on the 7th. Did not really break through on higher volume. What we are seeing out here today is challenging the previous high of January 11th that had 10 million shares on 3 million shares today. And looks like we're going to tuck back down below or come close to it, but certainly no sign like a lot of these stocks truly want to break out into this market. BAC is another one. It's right out here at the highs. What is this thing doing? You have a huge candle for it, let me put it that way, or at least a moderately decent-sized candle. So you have nice price action. So far, not the kind of volume you would like to see in BAC, and that is basically 230 million shares from January 7th. We're getting into that with 140 million shares. And if volume continues to creep along as it does, don't look like this is going to get any better. 2.4 billion shares right now. And what time is it? 2:40. So probably going to look at what... If the history's last few days has been any deal, maybe 3.1, 3.2 billion shares on the consolidated tape, which is certainly going to need a lot more to keep this thing going higher. You know, up 3 points on the S&P cash, not a big deal out here. But I continue to see stocks that opened extremely high on earnings, run some shorts, giving, you know, a good deal, maybe half of it back. One of those companies, I know we had a caller in on Fossil, F-O-S-L. This one had a nice little tick out here today, up to 115.19. And this is kind of what I'm looking at. Even when you come in on what they think is better than normal earnings, a lot of these stocks are continuing to reverse intraday. What else do we have? Cisco. The company I love to hate. Another one up here, actually better volume than a lot of these for the previous test of the highs, but nothing so far that's really telling me that the energy is really coming into this stock. If you look at the power law vector indicator numbers I have, and you've got basically two runs that are pretty identical out here. But what you have is the last run from December 31st up to this high yesterday had about half the energy from the run from November 9th up to December 19th. So it's, I guess after you've been looking at volume, it's a little easier to see it on the volume scale, but you can just draw a nice line all the way back from that November 9th low where you actually had some decent volume out here, but that you still is a untested low in this marketplace, and you still have an untested low from July 25th, 2012 in Cisco. Everybody and their dog is coming out after them. Oracle, or CL, bought Acme Packet, a session controller company. That only means one thing, and that is Oracle's going to spend some of their money coming after Cisco. And I think Cisco's a pretty nice piece of low-hanging fruit out here. Acme Packet makes what are called session border controllers. And when we look at that, if you own Yahoo or Google or any large website, especially if you're streaming, let's say Netflix, you're streaming video, these session border controllers make sure that audio and video streaming comes out of your system and gets to the consumer of it very well. So it's a giant kind of traffic cop, a little less just straight router and more of a gatekeeper and a cop with a little yellow cone signaling everybody, trying to keep traffic moving. But Cisco, I think, especially John Chambers, I think, has built a house of cards in Cisco, and one day Oracle's going to be knocking at that door. Kraft Foods is another one of these, KFT. Where's my little symbol out here? Huge volume bar out here today, and so far, you know, what can you say? It is going to hit this high on higher volume, but relative to the September 21st, ooh, what have I got here? This is not even right. Nope, I'll have to look at this again. I was looking at the wrong chart, driving me insane. McDonald's, I wanted to check on them. These are one that had come up and actually started looking like it was going to try to break out from higher highs. This is, again, on very light volume. You had previous highs in this 93, 94 range. First one on July 19th, the second one on October 17th. Basically, the first one on 11 million shares, second one on 7 million shares. Of course, a real pullback down to the November 16th low at $83. This has moved up. Energy, not all that bad, but what we do have is, again, we break out to these higher highs. You want to see a sign of strength. That is volume and a big candle. We've got nothing but this thing going sideways. It's very hard for me to decide to fold my shorts, especially when some of them are actually off 3% today. To actually, I got one up 3%, one down 3%. So my portfolio, for the most part, is not moving, but I continue to see weakness in this market. And as long as I can tread water here for a few more days, I'm more than willing to let the market tell me I'm right or wrong instead of guessing. But the market really looks like it's fairly weak. Microsoft on the investment conference, not getting a lot of love. I've played with their new laptop slash tablet this weekend, and pretty neat little box. I played with it back in September. It changed a little slightly since from the prototype version I played with in was it early December. But for the most part, one of the nicest laptops slash tablets as far as that idea. I like at least a decent keyboard in what it does. And it is probably, if you're looking for a tablet, not too bad. If you're looking for a laptop, the same amount of money is probably going to get you a fairly decent laptop. So the question is, do you really need a tablet? Do you need something that's touch sensitive? You probably find something a little lighter. But if you're wanting something ultra slim, ultra small, not too bad. But I don't know. It's I don't have a lot of use for a tablet. I don't have a lot of use for a notebook. I sit in front of my machines pretty much all day, being a trader, writing newsletters. And if I can have a full-size keyboard, if I can have a giant 37-inch monitor so I don't have to wear glasses, kind of like now, other than we've got little smaller monitors, I just have to kind of squint when we look at them. Continuing to see those stocks not move very far. Anyway, you can give me a call before the show, end of the show today, at 877-927-6648. Just looking to see if we have anything else. AT&T, another one out here, looks at like it's at support levels in the Dow. Again, not bad volume up here at the top, but certainly not chewing through, especially today. Another attempt at this top onliner volume. You can see the supply coming in right at $35. November 2nd it came in. We see that again on January 7th. We see that again on February 1st. Going sideways, and today extremely light volume, once again trying to push that 35.5 kind of mark out here. These are the ones that we want to be watching over the next couple of days to really get a good indication what's going on. Verizon Communication, it's come off with some decent volume. Been going sideways here for a little while. It is trying to come back into these highs. Again, sideways action with not a lot of volume over the last 3 or 4 days. And we're looking at the Verizon high of December 12th at 44.94, 10 million shares. You had 17 million shares on February 5th and couldn't break out that high, and it's gone sideways for about 4 days on lighter volume. So we are right up against it. Should be able to figure out whether or not we're going to be breaking out. Walmart, the last in the Dow today. Again, a lot of these have already come off their highs, coming back up and then challenging the previous highs. Walmart just has a little farther to go. Just a buck under the December 11th high. This energy has not been good on the last move up compared to the November 19th to the December 11th leg that it had. This energy's off by a fourth, maybe a little less out here. But could we still get into this? You could, but boy, do we have some high volume down days that it's chewing through right now. 14.6 million shares. It's already chewed through the 23 million share day that it had on the 12th of December. So we're getting right up to here, and looks like a lot of the energy is out of these. ExxonMobil, another one of these. This thing has been piercing what should be a support level, and on a gap up. It had okay volume out here on the 2nd of January, like a lot of the stocks did on the fiscal cliff issue. Up 16 million shares, came back into it, pierced it February 6th with 13 million shares, and we got about 5 million shares. So ExxonMobil pretty much also at a do-or-die stage in a lot of these stocks that we're seeing in the marketplace. And we'll have one more quick check out here, see how volume is rolling in. Last time, 2.5 billion shares on the consolidated tape. Very little movement in the S&P cash out here. What can you say? Just a very light sideways market. The momentum players are gone. Let me look at it that way. We will be back in just a minute. Give me a call, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Great moments are born from great opportunity, and that's what you have here. The opportunity to answer the questions, should I buy or should I sell? Should I be in or should I be out? Hi, I'm Steve Rhodes with TFNN, and I produced a free report, Reading the Message of the Markets, where I'll teach you how to use a set of tools that will answer these questions. Go to the homepage of TFNN.com right now and download Reading the Message of the Markets. This free special report includes step-by-step video examples that would have had you out of the market before the crash of 1929, before the crash of 1987, and would have had you back in the markets buying at the bottoms. This set of tools works on all time frames and all instruments. This set of tools will shape your trading and investing future. Folks, this moment will never be here again. The only cost is not taking action. You were born to be a money master, and the time is now. Go to the homepage of TFNN.com and order Reading the Message of the Markets.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we're looking through some of these companies, let's see just how well they're tracking with the rest of the market. We continue to look at some of these stocks in the housing market. Little bounces out of some of these today, and whether or not they're going to have any volume. We looked at USG, of course. I think they make a lot of drywall. They're trying to break out, go higher, rolled back into the trading range. Popped today, but very, very light volume, back into the gap down from the fifth. When we look at SPF, which is Standard Pacific, a housing builder out here, they broke out with lighter volume, pulled back into the trading range, pop up today. Again, is going to be on lighter volume out here. Ryland Homes, some of these kind of broke out off the highs. So when we look at this, not too bad actually. What I dislike is that huge sell-off of the high at $43. We are popping back up there, but you're going to get probably into about 41, something like that. and start seeing resistance. Pulte Homes, another one, kind of a similar, just a change out here. Anyway, we've got a caller, and we're going to go right to him, and that is Mark from, take it Cheyenne, since he probably couldn't spell it. How you doing today, Mark?
Fine. I'm well. Thank you.
Okay, Whole Foods. So what are you thinking about this?
I'm looking at it as a possible short here in the next couple of days. I'm kind of watching the volume. It's about half today what it was yesterday. It's kind of reaching that high there of February 1st.
Yeah,
96.86.
Yeah.
And,
2 million,
anyway.
2 million shares, yeah. I think that's probably where you'd want to short this thing, anywhere up to $98 as a short. And you had, volume on that down day on the November 7th was 3.7 million shares. So you'd have to get a lot of volume to get up here to not get a signal. You really, you had a kind of a nice consolidation down to this $86 on January 8th. This thing's moved up, but no sign of strength, and just back up to the gap down that had heavy volume. So, what are you thinking, 86, 87 for your target on this?
I was thinking, well, no, probably not that low. I was thinking more in the area of around, like 91, 92.
You could get that. I think you've got a high probability of that 86, 85, though, just because you've had the previous low and almost double the volume of that November 14th low. So you've got a high volume untested low anywhere into that candle. So probably even at the worst case, I would look at 89 for your target back in here. So not bad. Be a nice trade out here. But you've got a doji out here today. Boy, the problem is you almost need to take the trade today if you get a doji. So probably not a bad looking thing. I'd watch how this market closed, and if you get a little sell off in the end, this may not be a bad one to go ahead and put. Have you looked at the options on this?
No, I don't do any of that at all. That's not my expertise.
Okay. That would be the only thing I'd say. I haven't looked at options in Whole Foods, but not a bad setup up here. Could it go? I mean, the nice thing here is, about over $99 is probably, a trouble for you. So anything under that, you're probably fine. But I'd look at it today or tomorrow is probably going to be the day you need to short this thing.
Thank you.
Thanks. Have a great day, Mark, and everybody else. We'll be back tomorrow. Same bat channel, channel 14 on Tiger TV. Same bat time, 2 p.m. Eastern Time, where we all get together and talk to your lovable and squeezable host, me.